take a look at the bigger picture. Matthew Johnson's with us, president owner of Johnson Wealth and Income Management. So, Matthew, what are your thoughts on the trading week? We sort of kicked it off for you. What are you digesting? What do you think is monumental here this week?
Hey, Nicole, thank you for having me back. So it's been rough, hasn't it? Since the beginning of the year, we've seen really low lows, and we finally come back. There's so much information to try to take into consideration. There's so many different moving parts to this market. Is energy going to grow higher? Is it going to go higher? What are we going to be spending on gas, grocery? And I think that this is an important component. The people that I serve as an advisor, they're looking for in that retirement. They focused on what matters to them. And instead of picking, hot stocks, they're just trying to say, am I safe? Am I going to have the income that I need to be able to, cover these inflated prices at the gas pump and in the grocery store? So it's pretty dangerous. We have just so many different headwinds and variables and uncertainties going on. It's really hard to get a sense of where are we going, what's going to happen next, when's the next shoe going to fall. I think so many of us feel the uncertainty of today, and it's very challenging for all of us, whether we're not retired or we are retired.
So as we look at what's going on here, because as you mentioned now, your advice to folks with this kind of volatility that we've been seeing in the back and forth, you said have an objective for your money and stick to that objective. What would be some scenarios here, maybe some good working possible objectives, and you should stick to that?
Well, as I've said before on the program, when you're looking at retirement, your focus changes a bit, doesn't it? Your focus is now really focused on how much income do I have at the beginning of the month? And my specialty is income. Clients come to me so that I can help them take what they've worked so hard to save, make it safer, and make it produce income. Now, it's true as the Feds continue to raise interest rates, they're saying that they're going to raise interest rates 6 more times. And is that really going to happen? I don't think so, but it doesn't matter what I think. Its perception is reality. And so as the Feds continue to come out and we digest this information about what it looks like with interest rates continuing to tick up to try to help abate some of this inflation, we know that there is fixed income that's been on sale and is probably going to continue to stay on sale. So what are we doing to defensively protect our income? Are we focused right now on performance, or should we rather be focused on purpose? And so, when we look around, we need higher yields. You can see what's happened to the 2-year Treasury. You can see what's happened to the 10-year Treasury. I'm focused on what's happening and the kinds of yields that are happening in my clients' portfolios. And if I can get them to that point where they're, consistently and very steadily producing that 4 to 6% in yield, in income, not in appreciation, but in yield, so that they can spend the dividends, they can spend the interest. That's what helps them to be able to deal with this higher cost of living, which no doubt is going to be with us for a time.
Right, and so at the same time, you said when trying to put your portfolio together, you just have to really look for quality, right? And what would signify quality to you?
Well, we need to be looking at companies that have a historical trend of paying dividends without cutting those dividends. We want to be able to see history more than just, say, the last 5 to 10 years. We're looking for large cap companies that are well developed. They've got a good, solid balance sheet. They don't run a lot of debt, and they have a history or a track record of being able to pay their shareholders dividends, increasing those dividends. And if you think over the course of the last, say, 50 years, how many recessions has this country gone through? You want to be able to look to see if those companies during those times of recession cut their dividend, or if they continued to stick with that dividend and potentially even increase the dividend. People are familiar with equities. People are familiar with bonds. There's things that we can start to implement into our portfolios. I'm a big fan of business development companies. 90% of the profits made have to be paid back to the shareholder in the form of a dividend. And though you may have some very safe conservative investments, things like, investment grade bonds and that sort of thing, if you simply implement just a little bit of business development company or something of that sector into your portfolio, that can help to really buoy the yield and provide greater amounts of income for you. And at the end of the day, that's what you need is income so that you can be able to continue to afford your lifestyle during these times of volatility.
Yeah, and in the end, when you talk about what the Fed may or may not do, sounds like you don't think they're going to be hiking quite as much as everybody thinks they may be hiking. Also because if they start spinning off the balance sheet, running off that balance sheet, that would equate at least a couple of hikes, maybe. So with volatility being very real, a war that's continuing abroad in Eastern Europe, and just the uncertainty, do you still feel bullish long term?
Long term, yes, I do long term, but short term, I think we're going to need to be buckled in for the ride, right? There's going to be this period of volatility because we have a period of uncertainty. And so, it's kind of like Coach John Wooden said, we need to be able to focus on what we can control. We can't control what the Feds do. We can't control the war between Russia and Ukraine, but we can control our portfolio. And this is where it's so important to be able to work with a trusted, safe fiduciary who's going to be able to identify what your objectives are. And instead of throwing Hail Mary passes, if you've got the points on the board, why are you taking on the risk? Tuck the ball in, run the clock out, and win the game. It's all about the income. And, there's going to be some really good deals in the market that you can pick up. But I feel personally that there's going to be even more good deals in the future. So having a little bit of cash on the sidelines is not a big deal as long as we don't have too much, because then we're obviously unnecessarily losing to inflation. And maybe consider that implementation of some fixed income, some business development companies, some quality REITs that are paying a good quality dividend. All of these things provide diversification and defense to all of this irrational, instability that we're seeing. And I don't want to say that the market is irrational, but we've got a lot of knee-jerk reaction that's been going on, and it's going to take some time for things to kind of calm down in light of everything that's being thrown at us today as investors.
Matthew Johnson, thank you so much. Matthew Johnson, president owner, Johnson Wealth and Income Management. Thank you for that. Good to see you.